Hi everyone, and welcome to your Overseas Homes first webinar of the week. Thank you for joining. My name is Rosie Bradley and I'll be your host today. Today we're chatting to Phil Morris from Chase Buchanan about your financial considerations that you should think about when moving to Portugal. It's great to have you all with us today, whether you're watching live or catching up on demand. We have about 30 minutes today, so we'll get started straight away. If you have any questions, we'll be saving them till the end. You can ask your questions in the tab on the bottom right. If you do need a reminder of anything discussed today or want to share this with family and friends afterwards, you'll be able to watch this at your leisure on demand on the Your Overseas Home website. So Phil, it'd be great if you'd be able to start by giving us a quick summary of who you are and how Chase Buchanan can help our watchers today.
Sure, thank you very much, Rosie, and thanks for the invitation from Your Overseas Home to participate in today's webinar. I'm Phil Morris. I'll be taking you through some of the financial and tax essentials of moving to Portugal. And I work for a company called Chase Buchanan. We are a EU-regulated financial advisory. And ready to start the slides.
Lovely. I'll just share them for you. There you go.
Okay, so as I've mentioned, the title today. So without further ado, a bit more about the company. It was important for us originally, being a UK company, to generate and create a EU presence. We chose Cyprus for that. The reason is that Cyprus has a very highly respected regulator, which emulates pretty much what the FCA do in the UK. That's important to us. That's a framework that we understand. And it enables us to have a license, which is important in our industry, so that all our clients receive indemnified professional advice. That license sits in Cyprus and covers us for the whole of the EU, including Canada as well. And we also now have a US license. So these are some of the physical offices where we have our qualified advisors based. This is a little bit, just very quickly, not to start the yawns early on, but this is just details where our licenses sit. So from the left to right, we have the MiFID, so-called MiFID license that covers us for the whole of the EU, and we also have an insurance license. Some of the things that we do are insurance based, and then we have our older UK license. And we also provide tax advice based out of the Isle of Man. And there is our US license for any US nationals. I know that several US nationals do tune in to these webinars. And we do have a specialist team who deals with those people because, as you well know, you cannot necessarily do everything Europeans can do. I do apologize in advance. Some of my slides to come will be UK centric, but I know, as I say, we do cater for US nationals. We do work with a number of partners. Just to mention this really quick, this booklet we contributed to with the help of the Metropolitan Police in London, helping them create this book that details pension scams, online crime, things of that nature. Unfortunately, they've become ever more common, due to COVID, perhaps. Crime has moved online. So you can download that from the police website. You can contact us and get a free copy if you'd like. So let's get down to about Portugal. And the number one thing I've put here is that there is no wealth tax as such. I know many of you are perhaps looking at Spain and Portugal, maybe other countries. Spain, definitely, there is wealth tax in a number of regions. Portugal doesn't have one as such, so we've not only got the best wine, the best tapas, the best weather, we've also got no wealth tax. So if you're thinking of Portugal, there's a little nudge in the right direction. Brexit did change things for any country, any Brit sort of wishing to move and retire to the EU. It brought with it essentially the withdrawal of freedom of just being able to sort of go and live where you want in the EU. So that's a catalyst for additional paperwork and considerations when considering your financial makeup, if you will. So yeah, you can no longer just stay however long you want and keep your feet in two canoes as such. You need to make a decision really, whether it's UK or you're really going to move, in this case, to Portugal with two boots. If you don't have any form of residency visa, you'll be subject to 90 days in any rolling 180-day period. So it hasn't been particularly strictly enforced last year, but it could well be that you would get into trouble if you fell foul of that now. And then just hints and tips. Obviously, you're going to do research. Webinars is a great starting point. This one's obviously a fantastic one. Then you're going to get into scouting trips. If you know Portugal already, perhaps you've spent holidays here, already fallen in love with it. With your overseas home, maybe your property shopping, but you'll want to come perhaps a few times and have a look round and have a look at properties. Use that time perhaps to build up a network of professionals that you might consider working with regard to your property purchase. And I would urge obviously to contact financial advisors such as myself or any of my equally qualified advisors here at Chase Buchanan. So let's assume we've jumped to point 7 here. We've secured a property. You will want to, even if you haven't got that far, obtain a NIF. That is your sort of tax ID reference number. It's a little bit like a national insurance number, but also, it's like your unique tax number as well. It's kind of one and the same, works pretty much the same. And it's probably worth opening a Portuguese bank account at that point as well. And you can do that online. You can do it in London and maybe in your home country, but in my experience, it's easier if you do that whilst you're here. So if you are buying, there's just a quick dossier on what you might be in for in terms of a purchase tax on that property. So if you just keep in mind 6%. So when you're scrolling the internet, just keep that in mind. That's my point here. No point going through each line. But maybe that last one, you shouldn't be paying an agency fee, up front or for anyone to do searching for you. They should be compensated from the buyer side. Okay, so you're preparing to leave the UK. What do you need to do? So yeah, you're going to make a decision on perhaps where you live at the moment. If you're an owner, are you going to sell it or rent it out? And then you're going to basically decide which visa route to select for your Portuguese residency. The typical one now is called a D7. That's if you can prove that you've got passive income or remote employment, a regular income essentially, so that you've got enough money to survive and live comfortably here. So it's typically a pension income or a rental property income. That's what they want to see. If you're perhaps a bit younger and you want to continue working, that it would be the D2, which is kind of, and now there's another sort of offshoot of that called the digital nomads visa. Portugal has hit the news on many occasions, certainly in the last 6 months, about being one of the best places on the planet to live and work, not just retire to. So we are seeing younger people come who are still want to be active, and the golden visa is still operating. Its parameters have changed a little bit. You used to be able to almost buy a property any way you wanted to, and if it was over a certain amount, qualify for residency, and you didn't have to spend particularly a lot of time. You could come on holiday for 2 weeks and keep your residency up. So that's been restricted now. It's moved away from the sort of hotspots and the coastal regions. You need to be. There are a few pockets available in sort of driving distance from the coast, but the government's tried to use that now to encourage investment a little bit more inland. You can make investments as well, sort of Portuguese qualified investments to the value of a property purchase. But that's probably enough said on that. Most people are going to go for D7. In terms of timeline, this visa, I've put 2 to 3 months. It might take you 3 to 4 weeks of running around and applying for things like non-criminal records. That might take you a month. The embassy gives this job to an agency called VFS. They may take 1 to 2 months to generate that initial visa that you get printed in your passport. Okay, then you would come here on an initial 120-day basis, and you're allowed in and out twice. Simultaneously, you'd be given an appointment with the immigration service, the SEF or SEF. At that appointment, you would get your biometrics recorded, and hopefully shortly after, in the mail, you would get a little sort of plastic card, almost like a Portuguese green card. So again, I've suggested maybe the whole process, if you're really going for it, kind of 6-month timetable. Another little items there, look at removal quotes if you're, you're bringing furniture, and think about if you're exchanging large sums of money, things like Revolut, and to an extent Wise aren't bad. For smaller amounts, let's say 5,000 per transaction or less. But if you're moving bigger amounts, perhaps for a property purchase, it's worth getting a professional who can save you money and give you that personal service. Smart Currency are good guys to know on that basis. If you need to get introduced to them, by all means, contact myself. Or I think your overseas home website probably has an introduction to them. Right, some of the typical financial planning considerations. So, capital gains tax. If the one thing you've got is a family home, and you're going to sell that in the UK, then wouldn't be subject to capital gains. However, if you then started renting it out whilst you're here, then that would change that, and it would be liable for the period of time that it had been rented out, almost on a commercial basis. I mentioned pensions there. They're quite a considerable consideration. So I've put a little note there. I'm going to talk about that later, just in more detail. Again, UK-centric ISAs, PEPs, life bonds aren't necessarily compliant in Portugal. They are wrappers. They are UK tax law wrappers, and Portugal will look right through them. For instance, a cash and shares ISA, they could be looking to tax the capital gain on those on encashment, and the assessment would be going right back to the time when you first bought the funds or the share. So it can be considerable. So, ideally look to sort of sell those down almost if you're able to before you come, and then you can put them into a similar kind of environment that is Portuguese compliant, and that will serve you well, later on down the line. UK state pensions often a question, so I'm preempting that. That can be paid gross. You need to sort of obviously tell HMRC that you've left, or they'll assume you haven't. And maybe it's a time to think about, getting wills or power of attorneys just sorted out whilst you're there. It might be a little bit easier. Right, NHR. You've probably seen it. If you're seriously considering Portugal, you will have seen NHR all over the place. It stands for non-habitual residents. And the element of confusion is caused by the name because it has nothing really to do with residency. It's not a sort of any type of residency visa, or it's not linked to that. It is a tax regime, and it's, if you like, a golden hello for choosing Portugal. You get kind of softly taxed for your first 10 years. Pensions are now taxed at a flat rate of 10%. That is on the income you take. It used to be 0, but I think in 2020 that got changed to 10. Foreign income typically taxed at 0. That's because it's deemed to be taxed in the source country. So, for instance, if you are renting out a UK property, you will be paying some tax on that to the UK, maybe, depending on the size of it. But what I'm saying is it won't be taxed further by Portugal. Dividends also 0. Royalties 0. Interests, interest-bearing accounts or whatever they are, that would be 0. If you carry out work in Portugal, that can be capped at 20%, where you might have looked up NHR on the web and seen a lot of list of what Portugal calls high-value professions. If what you do falls into that, then you can qualify for this 20% regime. Very useful thing to get, not unreasonably withheld. You need to do it before the end of March in your first full residential tax year. Let me clarify that. So you would need to do it once you'd spent a cumulative 6 months or 183 days here in Portugal. For clarification, get in contact. But don't miss the boat. End of March after the first year. I've met people who did, and it can be difficult. It's not unheard of to get it, but it makes it awkward. Right, pensions. I said I was going to deal with these in a little more detail. Here we go. So I have mentioned that there would be a flat tax of 10%. Now the UK has a pension commencement lump sum ability, which is 25% of the pot. You're allowed to take tax-free, right? So that's tax-free only in the UK. All right. So if you don't take it, Portugal's going to want 10% of that. So, general advice would be, if you're 55 or over, and you agree that it's a prudent thing to do, take that before you become tax resident here in Portugal. QROPS is out. That's the qualified recognised overseas pension scheme. So it used to be the done thing to move your UK pension out to somewhere like Malta. That's largely been quashed by the government, and it's still relevant if you have non-UK money that you want to put into a pension. It's still a framework that exists. If you're moving from other countries and you've already created a QROPS, it might be relevant, but typically it is not the done thing to move a UK pension out at the moment, but moving it to an international SIP is certainly something still worth doing. It would mean the pension stays in the UK, but you'd be in with a SIP administrator that knows expats and knows what they need, and make sure that you don't get taxed at source, don't get taxed in the UK. And there's a few other advantages too. If you've got multiple pots, and I know many Brits have worked for several companies and got little pots all over the place, makes sense to bring those all in together, reduce fees, reduce fixed accounts fees and things like that. And also it might be a time, if you don't already have a professional advisor looking after that investment, because that's what a pension is, it might be time to consider sort of, taking your foot off the gas, letting a professional do it. You relax in the sun, and let us get on with that. That is something that certainly I do and Chase Buchanan do here. Touched on currency planning, but another thing about, I guess, an international SIP, and if you take what's happened to the pound, certainly in the last 6-7 months, the international SIP would essentially allow you to keep a euro wallet, so that you can capitalize when the rate is good. You can sort of foresee the income that you are going to require, and perhaps move that and keep that in euros. And obviously people who did that last summer did absolutely the right thing, because we're suffering. We don't seem to be moving off 1.12 at the moment, but we've got that added advantage in an international SIP. So you're actually arriving in Portugal. If you've reached out to those professionals before online, perhaps you want to go and meet them face to face. Certainly, I'd love to meet you face to face. Now, COVID-19 is hopefully, largely behind us. We're certainly carrying on as normal, so it's great to meet people again. And this is the fantastic bit about my job. Another reminder: get your NHR in, and we can help direct you on how to do that application. If we get together plenty early in your Portuguese journey. You can apply for a Portuguese, if you like, national health equivalent number, and therefore entitled to get free healthcare. I guess I hear mixed things. Sometimes it's a bit like the UK. It's a bit overloaded at the moment, and private healthcare is quite common and a lot cheaper than the UK. It's quite a sort of system. It's probably a bit more like the US kind of system that's operating here in Portugal. Obviously, last tip: that isn't a tax acronym or any sort of immigration department. SPF, pack your sun cream. You'll need it. Over 300 days of wonderful sun. It's January at the moment. It's sunny every day. Is dropping at night, but certainly beats the winter blues. I'm conscious of time, so just a very little tick list of useful, perhaps, tips. P85 is basically applying and telling the UK tax authorities that you have left, so you can get paid gross, and particularly with regard to pensions. You could consider, things like a compliant portfolio bond, again, as an alternative to ISAs and things like that. They were under UK rules. These can give you sort of avoid a cold shower in year 11 when your NHR runs out. Tell the UK that you're leaving if you're a landlord, and then you won't have tax withheld by your letting agent. Driving licenses used to be a thing, but if you're fortunate enough to be 60 or under, you don't need to change them anymore to a Portuguese license. You can keep it. There's been probably, if you're on Facebook groups, you'll see a lot of chat about that of late. If you're looking to escape the US and UK tax regime, take care of this. Look at the statutory residency test. Make sure you don't spend too many days back in England if you're going to move here and get out of the UK tax. I mentioned UK will, power of attorney, car. Also, cars are very expensive in Portugal. Get over it. In your first year of residency, you do have ability to bring one vehicle in, tax-free. If you've owned it 6 months plus, you can look under, it's called a vehicle matriculation. It is a vast subject, but it can be done. But again, beyond the scope of this webinar. So yeah, I've talked about leaving the UK, planting yourself in Portugal. Time and patience when you're dealing with authorities. You will be a first-time immigrant. If you've never moved to other countries before, you are going to hit this bureaucracy, and they do move slowly. Stay relaxed, and get some good professionals to help you. So we've got time, I think, for any questions if they have come up. I'll try and answer as best I can in a general manner, and there's my contact details if anyone wishes to reach out directly.
Fab, thanks, Phil. There's some really interesting bits on there. I'll leave your contact details on there if anyone wants to write them down. We have indeed had a few questions through, so I'll fire them at you, and if you can do your best to answer them for us.
Hi.
Our first question is from a US customer. She says the US has a tax treaty with Portugal. US taxes income outside of Portugal. Portugal taxes pension income. I think she's asking what is considered pension income and who taxes US IRA withdrawals.
Yeah, so I mean, it's a colleague of mine, and we have a whole department that is let's say the US experts. I did live there a little while ago in my younger life. So essentially, with a US passport, you are US tax resident for life. So it's the US that's going to tax those first and foremost. Portuguese NHR system means that you don't, or you shouldn't pay any more, because you're probably going to pay an equal or greater amount to the US. But again, it's worth talking to my colleague to get an individual, in-depth sort of the whole 9 yards
to your own situation. My next question is from a customer who's working in the UK and EU, looking forward to buying a property in Portugal for long-term residency purposes. Do Chase Buchanan deal with such type projects?
Buying property, did I understand that correctly?
Buying property in Portugal for long-term residency.
Yeah, we are not real estate agents, property agents, estate agents. So no. If you come and see us, and we can help sort of introduce you to other real estate agents if necessary, if that's not beyond the scope of your overseas home, mortgage brokers, people like that. But we are not by that. There is, by the way, I should mention this. I know we're short of time. There's a property company in London called Chase Buchanan. That is not us, and we're not connected to them.
We have someone who is in Portugal currently on a D7 visa. He's shown a passive income for his property in Dubai. Does he need to pay taxes to the Portuguese government? And for which year, as he moved here from Spain on the 5th of January?
Right, that's tricky. I mean, so I'm assuming the person will be able to get NHR. Okay, that's a very obviously just been here a few weeks. Portugal during NHR would deem that to be taxed in the UAE. Historic taxes, I don't know how long they've been in Spain, but if they became resident there, then Spain would have an interest. And I'm not sure of we do have an office in Spain, that might be able to help there, but it would be a tax accountant if they really want to get a, underwritten and precise answer to that question. UAE is on the blacklist of Portugal, so when that NHR runs out, they might, and the property was sold, let's say, there would be a higher rate of capital gains tax of 35% to pay on the sale of that property potentially. But again, I'm not an expert on, if there would be any tax in the UAE. I know it's a very low tax regime there, but that would be my consideration there. But they should reach out. We don't bite. Let's get 15 minutes on the phone. I'll be able to say more.
Yeah, definitely, especially to your personal situation. So that will always help. Do you know if US nationals can benefit from international SIPs? Is that what you called it?
No. So again, I suspected there'd be a number of our wonderful American cousins on this presentation. So no, 401ks, Roth IRAs, they're all going to stay where they are. They're not portable. They're going to stay in the US. They're going to be taxed by the US. But the good news is they won't be taxed any heavier by Portugal. So it kind of is what it is. And I would, again, urge all US nationals, to get in touch, and we can arrange sort of a Teams meeting with the US expert.
I think we've got time for just one more. Let's have a look. How would the 10% pensions treatment work with a final salary pension scheme?
Yeah, well, it's when a final salary scheme goes into drawdown, it's normally a fixed amount for life, normally adjusted with indexation for inflation, probably around 2.5% per annum increases. So during NHR, 10% of that would be payable. Again, you need to make sure that you're being paid it gross and that your pension company knows that you've left and you've applied for a NT tax code. We can give you advice on how to do that.
Fab, thanks, Phil. Thanks for all your tips and advice. Everyone listening, we do strongly recommend when you get in touch with Chase Buchanan directly to discuss your requirements in detail about a move to Portugal. And thank you to everyone for joining us. We wish you the best in your overseas home purchase. We have lots of various other resources available, including guides and other webinars that you can join. So do take a look at the Your Overseas Home website in your own time. This webinar will be available on demand shortly as well. So don't worry about missing all the information. So thank you very much, everyone, and have a good evening. Thanks, Phil.
Cheers, Rosie. Thanks a lot. Bye-bye.
Bye.